Ethereum has been performing quite nicely in the last few weeks, and that is officially because of the Pectra update. So the update that makes Ethereum more usable. But the question is all of that news now baked into the price, and should we rather sell, or is there more upside potential still for Ethereum? Let's have a look at the data most people are not considering. Now here's the news. The Pectra update got launched last week. But the relative outperformance of Ethereum versus the rest of the market by 35% in the last few days isn't really that much of a surprise to us. I'm covering Ethereum regularly on this channel, and I encourage you to do something. Why don't you check out other influencers and see what did they say about Ethereum at different points in time? And what's more important than just the US dollar price at Ethereum at the time is actually its relative performance to other cryptocurrencies. So that's the chart we just looked at. That's the Ethereum dominance, because in the end we want to know, do we outperform the market by buying a particular asset? And so let's quickly go through this channel's history. There had been a video published 228 days ago. I lost hope for Ethereum, whales are dumping. We looked at various on-chain metrics, but the most important chart again is the Ethereum dominance. We just started to decline, but there was still quite a bit of downside left. So this here is the bottom that corresponds with the prices here. Another video a few weeks later followed, of course titled a little bit dramatic, what if Ethereum never recovers? And again, we looked at the same kind of charts, for example, Ethereum relative to Bitcoin or the Ethereum dominance. What we see over here, by the way, this arrow, that was the move from proof of work to proof of stake for Ethereum. So this is where the underperformance of Ethereum versus the rest of the market started. And so this is then where it becomes important to think opportunistically. And what kind of price is Ethereum cheap enough that it could bounce? Because that's a problem with most people that officially talk about investments. Most people have their favorite asset and they always pump it up and they talk bad about the rest. So there's Peter Schiff that always says gold is going up, even though there are many years where gold underperformed the rest. Then there are all the Bitcoin maxis that say we always should buy Bitcoin, even though it can go down by 60, 70, 80% in a bear market. And then there are the people that always like or always hate on Ethereum. And so making the differentiated case is sometimes a bit hard, because when I talk very bearish about Ethereum, say a few months back, and then I suddenly flip, then this can confuse people. Then I very often get these comments below the videos. Didn't you say something completely the opposite just a few weeks back? And the answer is yes, right? I'm adjusting my stance based on the market conditions. And so I was bearish over here, but then I published a video 3 weeks ago. Is Ethereum a buying opportunity? And again, just for reference sake, we're looking at this one single metric, the Ethereum dominance. And at that point, we already started with the bounce. And this is where we are today. Ethereum was indeed a buying opportunity. And so this is where I think most people get it wrong. Most people think that the price just reacts to the news. And because we had the Pectra update, Ethereum is going up. But then why did it go down when there was a move from proof of work to proof of stake? The tokenomics of Ethereum improved a lot with that change. What I think really is going on is that Ethereum simply got that cheap. Have a look at the total value locked on decentralized finance across chains. Ethereum has 62 billion, or a market share of 53%. When we then compare this to only 7% dominance in terms of market cap, Ethereum clearly looks cheap. Now, I'm not saying that the Ethereum dominance should be at 50%, because again, this is just DeFi, but still, DeFi is a major use case of crypto that's likely going to expand over time, right? A lot of real world assets are likely going to get onboarded by Ethereum. So not just the stable coins, but whatever might come in the future. For example, ETFs, say there will be an S&P 500 ETF, a tokenized version of that on the blockchain, that's probably going to launch on Ethereum. And so in this video, let's look at those relative valuation charts again. So not just the Ethereum dominance, but let's look at Ethereum relative to Bitcoin, relative to Solana, relative to Tron, relative to BNB. Let's see where Ethereum's market cap stands relative to all the competitors and see if Ethereum is still cheap. Now here we've got Ethereum relative to Bitcoin again. And one might argue that there is still upside of more than 250% from here. Yes, we have bounced, but in the grand scheme of things, we have seen larger rallies. Yes, it can be somewhat choppy. It's not just a smooth ride up, but still the pure risk versus potential return versus Bitcoin is quite favorable for Ethereum now. Now here we've got Ethereum relative to Solana. Solana outperformed Ethereum massively since the trading of the meme coins. So the Pump.fun ecosystem helped SOL a lot. That created a lot of fee revenue as well. Thus, Ethereum relative to Solana tended to underperform. But if there's some kind of a rotation, again, let's say because of real-world assets, there can be rallies of more than 600%. And even in the short term, there's still upside of at least 24%. Yes, there's a bit of a resistance that we might want to watch. But again, in the grand scheme of things, Ethereum relative to Solana doesn't really look expensive. Then there's Ethereum relative to the Binance Smart Chain, or the BNB token. ETH did underperform BNB over the last 6 years, but within the trend, we are somewhat balanced. Neither super cheap nor super expensive. Here's Ethereum relative to Cardano. I'd argue that Ethereum is likely going to see more adoption in the future than Cardano. Yes, ADA has a strong community, but Ethereum has way more usage and will likely continue to have more usage in the future. Here's ETH relative to Tron. Again, the potential downside of maybe 40% versus a potential upside of 300, maybe even 550%. It doesn't look too bad. Now those are all longer term charts. So I'm not saying what's going to happen to Ethereum relative to the rest of the market in the next week or in the next month, but I do believe there's a high likelihood that at least over the next 12 months it's likely going to do better than the rest. The crypto market very much works with narratives and with attention. And when there's not a lot of attention on an asset, prices tend to be low. When attention comes to the asset, prices tend to rise. So we've got our pool of capital, and then that pool of capital moves from token to token. I do not think that it's the direct demand from Wall Street that's going to trigger the next Ethereum rally. Maybe after we had the implementation of real world assets, maybe after we've got VOO, etc. on the blockchain, maybe then we will see more demand of the Ethereum ETF. But right now, we don't see a lot of outflows. We don't see a lot of inflows. It's relatively balanced. The Ethereum ETF isn't doing much to the price. Neither is the staking program. So in the last months, we haven't seen an increase or a decrease in the staking. So as long as this chart isn't going down, things still look okay. At the same time, because we see subsequent efficiency improvements in Ethereum, we tend to see now more transactions again. Yes, Ethereum is not as cheap as Solana, but Ethereum is also a more serious project, right? All the stable coins pretty much are issued on Ethereum and then just bridged over to the other chains. Ethereum is still regarded as the safest of the smart contract platforms. And something like Pectra also improves scalability to a degree through batching of transactions. And so yeah, this is a long-term chart of the number of transactions over Ethereum. We are not at an all-time high, but we are definitely growing long-term, and we're doing that growth while the transaction costs are still not spiking. So here's the average transaction fee on Ethereum over the long term. There was a huge bottleneck happening at the beginning of 2022. Then the usage declined. And now, as we've seen, usage is still up, but the fees are definitely manageable. And so what's then a reasonable price target for Ethereum? Let's again use the Ethereum dominance. The first potential profit-taking opportunity is when Ethereum outperforms the rest of the market by 44%. So if Bitcoin doesn't move at all, then Ethereum could still go up to $3,700 or so. Very similar levels to what we saw in December of 2024 or March of 2024. But let's play with the bull case. Let's say we see massive adoption of Ethereum again, and all our smaller chains rather see a decline in usage. Let's say Ethereum outperforms the rest of the market by 118%. If Bitcoin wasn't moving at all, then an Ethereum price of $5,600 is definitely possible. Now I expect that at the same time we will see Bitcoin going up as well, because money is flowing into the space. But it's always better to be rather too conservative than too optimistic, and of course take profit along the way as the price increases. Now let's zoom out a little bit and have a look at the macro picture. We actually see an expanding crypto market, money flowing into the market since October October of 2023 already. We know this because of this data over here, the stablecoin market cap. It's currently going up. Before October of 2023, it tended to go down. And the way this data is generated by looking at the minting and the redemption of stablecoin. So fundamentally how this works is when you deposit your hard-earned fiat currency to a centralized exchange, then that centralized exchange will send over the fiat currency to a custodian, to a stablecoin issuer. That custodian, so be it USDC, so Circle, or Tether for USDT, that custodian will hold the funds in a dedicated account and then will create tokens. So that's what's happening when this chart is going up. Whenever you're withdrawing your funds, then of course the custodian has to release again the fiat, send it over to you via the centralized exchange, and that's when we go down. And there's a reasonable case to be made that the more money is in a system, the higher the prices should go. Have a look at this. This is Bitcoin since October of 2023. And the largest drawdown we have seen while money was still flowing into the market was 28%. But again, when money is flowing in, those dips tend to get bought up. Now, what are those green circles over here? They appear after a price rally. It's an indication when there's a lot of attention on crypto. So there was a spike in search interest for Bitcoin at the beginning of March of 2024, but also at the middle of November of 2024. So that's what's highlighted with those bubbles. The masses tend to be late. The masses tend to buy after a price rally. And that's a problem, right? Most people enter crypto when prices are high and then potentially comes at least a short-term correction. And then a lot of those people that got excited about Bitcoin first have to ride through that correction. It can be minor, since currently the market still expands, but it can also be major, of course, as we have seen with prior attention spikes. And so there are two fundamental forces that move the crypto prices. First of all, it's the money in and outflows, but it's also the swapping activity. So once there's capital in the system, people tend to swap in and out of Bitcoin, but also in and out of the altcoins. And whenever we deploy, say, $100 worth of stable coins, the market cap of a crypto asset rises more than that. There is some inherent leverage effect. And that means we can measure how much the market is currently risk on or risk off. What we've got over here is the stablecoin dominance. So it's not the stablecoin market cap, it's the stablecoin dominance. It measures how much of the entire cryptocurrency market cap is currently in stablecoins. When this is very high, the market is risk off. So a lot of the market cap is in stablecoins. When this is very low, the market is very risk on. And in the last 1.5 years, we tended to trade in a range between 5% stablecoin dominance and 9% stablecoin dominance. And surprise, surprise, when the stablecoin dominance is high, it means crypto prices are very low. When the stablecoin dominance is low, crypto prices tend to be high. So interestingly enough, whenever the stablecoin dominance is low and when prices have already gone up, that's when the tourists enter and first get burned. So we want to be counter-cyclical. We want to sell when stablecoin dominance is low. We want to buy when stablecoin dominance is high. And it very much looks like we are currently on the way to seeing more stablecoin deployments. In other words, the current positive rally is probably going to continue. I don't have a crystal ball. It's just the way how I interpret the data. And then the question is, does it make sense to just buy Bitcoin if we expect prices to go up, or should we rather go with the altcoins? Now, some altcoins can do phenomenally. Others tend to underperform. But let's have a look at, for example, Virtual. Virtual went up by almost 3x in the last month. But I think it's better to try to find those altcoins very early. So the real gains had been made in the early days, right? When we look at the all-time chart of Virtual Protocol, those gains are immense, 20,000%. And so the life-changing money is not necessarily just in riding the current wave and buying a broad basket of altcoins. It's trying to find approaches to get into those altcoins much earlier than most. And I think a very good approach is to look at people that tended to buy well-performing assets early in the past. So for example here, right, this is Brian Young. he bought the virtual protocol token at 7 cents. And that was on the 21st of March 2024. So that's over here. We subsequently saw a rally of more than 6,000%. And so here's his YouTube channel, right? He's got more than 2 million subscribers. It of course begs the question, is Brian Young just more skilled, or does he have sufficient impact on the prices? Because maybe some of his following is buying into the token as well. I don't know, but it's always valuable to know what those kind of people are doing. The way how we knew about Brian Young buying into the token at that time was not because he announced it that early on his channel. It was because we track his wallets. We've got 5 of Brian Young's wallets. In total, we track almost 600 influencer wallets. So we've got also wallets by Alex Becker. He's got 1.6 million subscribers. We are also tracking the Crypto Banter channel. They've got 1.2 million subscribers. And again, I think it makes sense to be very early with the insiders and with the people that move the market. Now, of course, not every single token that's purchased by an influencer is going to rally. Some tokens are just bought and never announced on the social media, so we don't have the purchases by the following. But if you want to have a chance of being early, if you want to get the 10 or 20x returns, we can't just buy what's already big, right? We have to buy the things that the smart money is buying as well. And so here are a few examples of trades that our community has made. We discuss the influencer trades. We discuss potential opportunities to bet on rising, but also to bet on falling prices, depending on market conditions. And so, of course, we track our influencer wallets, but there's also a tutorial section on just how to find those influencer wallets. There are various approaches through NFTs, through related transactions, through deposit addresses on centralized exchanges. There are 8 tutorial videos in total. And so then the community is trying to figure out what wallets that we are not yet tracking can we potentially add to our bot. So there's a dedicated wallet research chat. We've just added influencer Chicken Genius. And then every day we get signals when influencers buy and sell. Selling is also important, right? Most people don't publish when they sell. It's very interesting. Some people just buy, publish a video on an asset, and then sell just a few hours afterwards. They're literally pumping and dumping on the audience. It's quite nice to look behind the scenes. And so feel free to check it out. It's down below. It's thebitcoinstrader.com. Currently the price is $125 per month. It went down because search interest in crypto is now rather low. Once we are up again, the price of course will get increased, but not for the people that are already subscribed. So once you sign up for 125, that price is locked in. So here's my recommendation. Don't wait until attention is again at those heights. We are still early. The market is expanding though. Macro is positive, but you don't want to wait until the rally has already happened. Right now, attention is still low. The rally is likely going to continue. As said, there's still money on the sidelines. The stablecoin dominance has room to further fall, which will result in rising altcoin prices. It's just about figuring out what altcoin has most upside. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. The link is down below, thebitcoinstrader.com. There should also be a link directly here on the screen where you click on that link, then it will lead you directly to the page. See you next time. Bye-bye.